Hooty hoo, all you stock market gamblers. Welcome. I'm Tall Mike. Today's August 25th. It's a Tuesday, and we want to talk about, is the stock market going to crash? Is it going to crash? I mean, we can all see how the economy is doing one thing, and the stock market is doing another thing. And they're probably the most decoupled I've ever seen in my entire life. I mean, they have the stock market has made this V-shaped recovery where the economy kind of still hasn't done anything, still in trouble. But anyways, they're very decoupled. Now, I think at some point they have to get recoupled together. Now, either the economy has to start doing a heck of a lot better, or I got news for you, that stock market's going to come down. Okay, I mean, it just makes sense. Now, which one's going to happen? Now, that's the question now. Most people would say, well, the stock market's going to come down. I believe it will eventually. Is it time yet? Probably not. Probably not. I think we can keep the stock market inflated until the election. I think they still have tools. They still have money. But you notice how they got to get the stimulus going again. Stimulus is kind of running out. The PPP loans, they're kind of dwindling down. The forbearance on mortgages is coming to an end. The eviction moratorium coming to an end. I mean, the unemployment checks, they used to be $600 extra bonus every week. Now that's been cut down to, it's been cut down to $300, but most states aren't even getting that money yet. So when all of this starts to run out, is the market going to come crashing down? What's going to hold it up? Well, I mean, if the government, doesn't put this stimulus out there, they don't continue pumping basically $1 trillion a month into this economy, into this stock market, will it hold? That's the big question, Now, a lot of people are worried about the debt. Now, I am very concerned about the debt, but it's not the debt that you think. It's not the government debt, which is at all-time record high. It's not the corporate debt, which is at all-time record high. It's not the state debt, which is at all-time record high. It's not the credit card debt, all-time record high. The student loan debt, all-time record high. The auto loan debt, all-time record high. No, it's none of those. Those are not the debt that worries me about a stock market crash. The debt that worries me about the stock market crash is the margin debt. Margin. Everybody's buying stock and they're buying it on borrowed margin. It's margin debt. Like, for example, if you put $1,000 into a trading account on, let's say, Robinhood, you can buy $2,000 or $3,000 worth of stock if you have a margin account. And this margin debt has never been higher. In other words, people, and so far it's a big bet. And I love gambling. It's like it's taking a chance, right? I mean, you got $1,000, now you got $2,000 or $3,000 to play the market. It's called margin debt, and this margin debt is very accelerated right now. It's at all-time record highs. Now, what you have here is when it's called a margin call. Now, when margin calls happen, it kind of, as the market drops, people can't pay for their margin calls. They have to sell stuff, and they continue to sell stuff on the way down, 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 and it just brings pressure onto the market. And it really is the reason that a lot of times you do see a crash. And they will sell anything. This is like back in March, for example. Anyways, gold and silver got sold off. It was because of margin calls. The margin calls, as the market collapsed, they didn't have any money to pay for their margin calls. They had to sell everything. And I mean everything. It doesn't matter what there happened. Now, that's what scares me about a market crash. Will it bring gold and silver down with it again? Part of me kind of hopes so, because I have some dry powder now, and I want you to keep dry powder. Always have dry powder for opportunities, because there's going to be a lot of opportunities coming in this market eventually. Now, not yet. I mean, right now things are very, very frothy. I mean, we are. You look at stocks like Apple Computer. I mean, $2 trillion. Well, and it's a great company. It's a fabulous company. I just think their PE ratio is getting stretched, probably 2, 3, 4 times of normal. Tesla. It has. I don't think it's ever made money for a whole year. I mean that its PE ratio. You'll have to own that stock forever just to get your money back. These are frothy stocks. These are not healthy things. These are not what you see at the beginning of a stock market bull run. Now, we had just finished the shortest bear market in history. We're now in a new bull market, but you got this froth entering the new bull market. Are we really going to have a long bull market run from here? I don't think so. I really don't. I think we're going to head lower, but not yet. Not yet. When? When it's time. It's not time yet. They can still have tools. They still have money. They're going to send us more stimulus checks. They're going to get that unemployment back pumped up. I mean, the Donald Trump administration, what they're really trying to do is they're trying to buy the election. Every president does it. No, I'm not saying anything bad against it. I mean, it's just the way that politics works, right? The election's coming. They're going to pump all the stimulus they can into the stock market. Stock market, usually if it's up, the president stays in the market. If it drops before the election, president's out of there, man. People hate when the stock market drops. So anyways, we're going to see a lot of stimulus going in, but I think we're really frothy right now. I think you have to be careful here. Now, when I say be careful, I'm actually put a trade on today. Anyways, it's the XLK, which is basically, you got your Apple in there, you got all these tech stocks in there. This is a tech index. And I bought some puts on the XLK. Puts. Now, I'm not saying the market's going to crash tomorrow. I'm not saying this is going to crash tomorrow. The reason I bought these puts is because the XLK normally, here's your 50-day moving average going up, right? And the XLK is riding up above it. But anyways, it's over 10% above the 50-day moving average right now. It hasn't touched that 50-day moving average in over 4 months. This is a very long time to be riding above the 50-day moving average without one test. I think we'll get a test. So anyways, I'm calling for a 10% drop in the XLK, maybe in the next month, let's say. I don't know exactly what's going to happen, but I took a shot. Anyways, I put some puts on the XLK. XLK, it's what I did today. That was my big trade for the day. Anyways, market crash. Market makes me nervous, but I do still think we'll go higher up into the election. I do. But a pullback would be welcome. I think it'd be healthy. Everybody, it's so funny. Nobody wants a pullback. Nobody wants to feel any pain. They don't understand. If you don't get the pullback, you're going to get a crash. You need to have these little pullbacks to let the pressure out of the market. Otherwise, all that pressure builds up, and then kaboom! Comes crashing down. Anyways, that's really all I got today. Just a short little video for you. Anyways, I'm Tall Mike. It's stock market gambler here. Now, I only have a couple subscribers so far, but if you like this kind of thing, punch that subscribe button. Go ahead and punch that button. Anyways, if you really, want to be interested in trading, you go to stockmarketgambler.com. Heck, get my free stock market secrets of how I trade the market. It's kind of a cool read. It'll take you about 5 minutes to read it, but anyways, it might give you some knowledge, some information, some way that I think about the markets. But anyways, definitely do me a favor and hit that subscribe button. Man, I need a few subscribers. Anyways, hope you're having a great day, and I hope to be talking with you real soon.